Welcome back to Money Mindment. In this video, we're continuing step 1 of my long-term investment strategy, and this time, we're focusing on the balance sheet and cash flow to complete our screener settings. If you missed part 1 on the income statement, make sure to check it out. Now, let's dive deeper into assessing a company's financial health using the balance sheet and cash flow. Balance sheet criteria: net receivables to gross profit ratio. Net receivables should be less than gross profit. A higher ratio could mean the company is having trouble collecting payments. I prefer companies with minimal reliance on intangible assets. I don't have a set threshold, but too much reliance on non-tangible items can be risky. For long-term investments, I check that they're recorded at either the original or market value, whichever is lower. I'm looking for an optimum return on assets, meaning the company is generating good profits relative to its asset base. Short-term to long-term debt should be less than 1. This indicates the company isn't over-leveraged with short-term debt. Net earnings should be sufficient to cover long-term debt in less than 4 years. A healthy company will manage its debt responsibly. I'm looking for a debt-to-equity ratio of less than 1. This means the company isn't overly reliant on debt to fund operations. Retained earnings should be greater than 5%, meaning the company is reinvesting profits into its growth rather than paying out all of it as dividends. Finally, a high return on shareholders' equity shows the company is efficiently using investor capital to generate profits. Cash flow criteria: I want to see that less than 50% of net earnings are used for capital expenditures. Too much spending on CapEx could signal that the company is stretching its cash flow. With these balance sheet and cash flow filters in place, we can ensure the company is financially healthy, efficiently using its assets, and not overburdened with debt. Together with the income statement criteria, these screens give you a solid foundation for selecting stocks to research further. Remember to like, share, and subscribe for more investment strategies. Stay tuned for our next video, where we'll continue refining our stock analysis process.